Martin from Secrets, the channel for learning about trading and investing. Welcome to weekly stock market analysis. So we look at what happened during the previous week in the markets and what do we get to learn from it and how we can plan for a better trade for the next day. So this is analysis of the week, second week of New Year 2023, and that week starts from tomorrow, Monday to January 9th, 2023. And let's see what happened last week. Let's see the charts first. And what you see here is Nifty 50 on the left side and Banknifty on the right side, and that's weekly charts that you're seeing. Look at the candle. It's a wide range bearish candle, on the Banknifty as well, and it is still engulfed in the 2 weeks before big fall that happened, right? Completely engulfed. That means it's not breaking down unless the low of that previous swing low is breached, but it's consolidating. It's bearish and it's failing resistance for sure, and it is a very bearish. All the gains that made with that green candle bouncing from the change in polarity zone is all given up, almost all. Same with Banknifty also, but some more strength is left in the Banknifty, you can say. That's what weekly it's saying. But remember, we're still at a zone where the previous resistance could act as a support, and a bounce up once more can be possible until it is negated when the previous swing low is gone. So this is another view of the weekly, right? We had this trend line, we had this bounce up on the weekly, multiple weeks with all-time highs, and then full retracement happened, a bounce up happened, failed to sustain, and then fallen back to the same zone. Same with Banknifty also on the right side. We had this trend line of resistance which was tested multiple times, and finally on a weekly basis it was broken out. Multiple all-time highs on Banknifty was seen. It fell down, did the correction, bounced up immediately on the next week and failed to sustain that, and then almost near to where it was, right? That's what we are. The daily short-term chart, that's Friday's action was again wide range bearish candle, and then wide range bearish candle on the Banknifty also. And we have almost retested, not exactly, but almost retested the previous swing low. Now we have a lower low, lower high pattern, and any breach of this low would create another lower low, and then again it can bounce to make another lower high, and like that the price action could be continue to be bearish if that happens. But if this retest zone acts as a support and a support is taken here and then bounce up, right, then it will be really good, right? So that's something unpredictable what the market has in mind, but yeah, that's what we have to look forward to. We cannot predict exactly what the market is going to do, but we can think of some probabilities. That's the best way we could do. Same with Banknifty also here. It retested. It is not fully retested. Retested means the previous swing low has been touched, right? Neither has it breached. So there is a possibility that a bounce up can happen. Some more possibilities. Next week there is a possibility that it can further go down till the retest zone and then bounce up from here, or then break down from here. All these possibilities are there. So it's a very crucial zone, as you can see. Bollinger Bands are showing that it's expansion on the downside that you're seeing on both indices, right? It's no longer consolidation. So that's it. Again, the price is much below but not too far, much below the median of the Bollinger Band. So clear indication of downside to expect on the Bollinger Bands in the short term. So we have seen this, and then support resistance levels is making a lot. We have basically bounced from Fibonacci 50 zones, so that could act as a support, the 17, 825, 800 that zones. And if there is breach, then you have the 17. Yeah, so these are all supports. So 17, 825 support, 17, 724 support, 17, 642 support, 17, 569 support. And then 17,429 is support. The last one is the previous swing low, and after that you have gap support at 17,328 kind of levels. That's how it goes. So it basically has taken a support and bounce from the Fibonacci 50. So down upside you would have the previous support would act as resistance now. So 17,559 would be a resistance. 18,000, 18,050 will be some Fibonacci 38 resistance, right? So 17,959, 18,000, 18,070. That zone is very crucial for resistance to be taken out before you think about it. And that's exactly the zone that's in confluence with the trend line descending wedge, confluence, you can say. So right now there is a long 2020 onwards, trend line that is going on, which is kind of seems to have breached. Right, just a little next week and see if that works. But yeah, it's on a crucial zone. So yeah, we already discussed that. So 18262 the resistance upside after the Fibonacci 38 resistance that you see at 18,000, and then 18,442, and then 18,530. So all previous supports now it's acting as resistance, and no, likewise it goes upside. Let's look at Banknifty. The daily charts of Banknifty showing resistance, and it is exactly bouncing from the trend line zone of the weekly, which had long been focused upon. After having tested multiple times and after having broken out from this and then retraced, taken support once and then same, it's exactly the same place now. Previous swing low with the first resistance support downside will be 41,840, then 41,586, which is Fibonacci 38 retracement as well, then 41,184. Likewise, it goes downside. Now, resistance is upside. The previous support will act as resistance in the upside. So first one would be 42,231, 42,363, the 42,556, 42,833, 43,339. Likewise, it goes. Some of them are Fibonacci retracement, some of them are previous supports act as resistance now. Right? So making note of these levels. So the probabilities where it may face resistances and probabilities downside where it may take support and bounce, reverse, whatever. So these levels need to be kept in mind, right? While we are taking the long or short positions. Right? Let's move ahead and see the momentum and trend. What happened? Right. Left side, what you see is Nifty and the Banknifty, which is on the weekly basis, weekly charts. Right side, we see the daily charts of Nifty and Banknifty. Top side, Nifty. So what do you see here? It's momentum that is slipped in the sideways on both indices. Momentum that continues to be in the sideways on the Nifty on the short term, the daily charts, but continue on the short term Banknifty basically. So Banknifty has breached the short term momentum and fallen into the bearish zones. Nifty has fallen to the bearish zones and Banknifty has not is still in the sideways zone. So there is short-term bearishness that's seen only on the Nifty, which has slipped into the bearish zones below RSI 40. That's the momentum indicator. But otherwise, we are all sideways everywhere. We are no longer bullish in any medium term or short term. That is in a nutshell. So short-term bearishness is still there only in Nifty as of now, as of this week, right? And we are looking at the trend indicator, that is the ADX is being used. So ADX is saying that in the medium term it's not bearish, it's still in the bullish zones, but with the rising, look at this, with falling strength. That means there is bullishness, but that bullishness does not have enough strength on the medium term on both the indices, right? But short term it is bearishness. Short term it is bearishness. It's in the bearish zones, basically the ADX, negative DMI, right? So that's so the two things that you can pick up from this is the trend is not turned into bearishness yet on the medium term, on the weekly charts, right? It's not a turn to the bearish zones yet, but short-term bearishness definitely it's there, seen in both the indices. And just to remember once again, the momentum of in the case of momentum which we are tracking with the help of RSI indicator is showing that there is slight bearishness of the momentum in the short term, not slight. There is bearishness in the falling momentum is there in the Nifty alone. Otherwise, it's everywhere sideways that you see in the short term and medium term on both indices, right? That's a summary of how the momentum is there. Moving ahead, looking at volatility, we had seen one side of the volatility using the Bollinger Bands, right? Another way of measuring the volatility is the sentiment indicator, that's a VIX, India VIX. It is not spiked up too much. It's 1.2% earlier spiked up in spite of this big fall that happened last week, right? Oh, that reminds me that we did not see how much we fall. Sorry about that. Let's get back and then just have a quick view on the price action before we get into the volatility. Sorry about that, right? So this is what happened. So this is again mistake here. It's 234. Let me correct it right away so that it does not get it anything. Right? So that's it. It's sorry about that mistakes and typos. Yeah. So here we have 1.35 lost on a week-to-week basis on Nifty and 1.87 lost on a week-to-week basis on the Bank Nifty. That's 800 points, 234 points. That's how the loss is there. I have a doubt on this. Let me just quickly go and clarify instead of we getting into wrong information. So it's kind of yes, that's right. Just to double check that, right? So that's how it is, right? So we lost 800 points in Bank Nifty, 234 points. That's 1.3% and 1.8% in Expectancy, right? We are closing above the 20 weekly moving average, emerging exponential moving average. Weekly exponential moving average, we are close above that on both Nifty and the Bank Nifty. And that it is completely engulfed by the previous to previous week candle. That's bearishness, and that's also indication of inside dollar consolidation. And both, right? Changing morality bounds cannot be ruled because we are at support. We are already seen that, right? So that's what we are. And the Friday alone we lost again 0.74. That's 133. 420 points, nearly 1% lost on Friday on the Bank Nifty. The Bank Nifty is making deeper cuts, wider candles, wide range bearish candles is what you see. And it is closed below the Nifty has closed below the 20, 50, 100 all DMAs, and Bank Nifty has closed below the 20 and 50. Now it has got the 100 DMA supports. So that's what we are, right? And Bollinger Bands, we already seen that it is no longer a consolidation. So I missed to look at this and check this numbers. Let's get back to the volatility indicator. So we have seen that in spite of the fall that happened, it's 15.15 is where the India VIX is on. So it means you're not expecting which is 1.2, but it is trying to get out of that lower regime, so lower VIX regime, and then you have to be cautious. And it's bearishness and open interest rate of the options, short build up and long unwinding is what you see in the Nifty and the Bank Nifty. I'm sorry, this is open interest rate for the futures. Futures contracts option OIA is showing that it's short build up. The last trading day, long unwinding is what you see. What are the bearish? And with regard to the options rate of the weekly of the open interest for the January 12th weekly expiry, the levels are seen here. Put call ratio does not seem good enough. 0.56 and 0.1 is closer to bearishness than the bullishness. Right? Look at this range. It's very interesting. 18,000 to 18,000 straddle started for the option writers for the highest call and put it there. 7,500 and 19,000. So the wide range for the second level of highest put and call writing of the support and resistance are seen. Bank Nifty 42,000 and 43,000. It's very small range where the highest put and call writing is. Put and 41,000 and 42,500. So the second highest put and call writing is seen there. Brokerage is closer to bearishness. Futures OI is also bearishness. We have seen that. Look at this level. So this may change because we still have 4 more days for the expiry. So Monday, things will dynamic. But as of now, this is what the options open interest data is showing with more closer to the bearishness. The only difference that there are a lot of put and call writers at the 18,000. That's going to be a very crucial level. You're holding there and breaching that, it's going to be crucial. So right now we have missed the rating K, but option writers are seeing that the price will move up to 18,000 and the fight may happen for this weekly expiry at 18,000. So once again, that's what it looks like. Right? So what happened in the industrial sectors last week? IT sector was down, metal was down, and reality was down. Not too much, 2.5% IT, reality 1.5%, metal just less than 0.5% down. And despite all this fall, the auto sector, pharma sector, and the FMCG actually moved up. Not much, 0.5%. In fact, there's 1.1, it's not 11% for sure. It's a mistake again there. Sorry about that. So, if you just analyze this, basically you can see it's all sideways except for the IT, which is following the short-term bearishness, right? The IT sector, right? This is all sideways. What is happening? None of them is bullish. So across the sector, huge bearishness is not seen yet. That's a summary of this. Let's look at the sector charts. Sector index charts is what you're looking at. Right? Look at this, the IT sector. Met with resistance and fallen down and then heading towards support zones. Very close by down. Momentum sideways. Metal did hit an all-time high and then tried to break out. That failed. Became a fake out and then it's a bull trap and then seems like it's heading low, but not too much yet because momentum still in the bullish on the medium term. Auto is again taken support at the neckline of the rounding pattern and then bounced up and finally end up last weekend to see whether to go up or do what. Momentum is sideways. Former sector is broken out, hit the resistance, fallen back to the channel and not ready to get into the channel. So there's some support on the channel top there, that price levels, and momentum seems to be sideways. If I'm CG has broken out and then retraced and then now decisive, but slipped to the sideways in the medium term, and it's about to cross the trend to the bearish zones, looks like. Right? No, it could take a support down even if it falls down at this neckline zones. But moving up, it's indecisive is what the candle is indicating. Reacted similarly, that support zone from the neckline of the cup and handle breakout, so it seems to be halting around that zone. It is bearish weak, but momentum is maintained as sideways. That's a summary of how the industrial sectors are performing for the chart of indices for the same. Heavyweights, these are the 7 heavyweights that we are analyzing. HDFC Bank seems to be a flag and handle pattern, and it's a red, big red within the flag top, and then big green and then big red again. But the momentum is still almost at the bullish zones on RSI on the medium charts with divergence also, which still calls out that there is possibility that it can take a support here and then it can bounce up momentum to the all-time highs again. But it's in a bear zone basically, where it spend a lot of time. It takes a lot of effort to break out of this. But once this is broken out, it will be a big one, right? See, FC slightly to the sideways on the bullish zones, but it's hidden to the flag pattern, flag and pole pattern is still valid, almost valid. Just breach the bottom part of that rectangular box of the flag. Let's see if the price is moving below the previous candle's low, then that gets negated. Basically, momentum slipped slightly to the sideways. Pattern is almost yet to confirm that it is negated that flag pattern or not on the HDFC clients. Some kind of consolidation is what you're seeing the last 3 weeks. Sideways movement is happening. Overall, this is what is happening. It had a breakout and then it is in a box range bound since long time, since October 2021. That's what it's doing. Now, good luck come to the stocks. Of course, bearishness has increased, and if you get taken a hit, and it has been zigzagging. The W pattern failed to break out. Double bottom has failed to break out, and now price is moving towards the same support zones of 1,400 below. TCS is more resilient than Nifty, but it's a bearish candle and the sideways movement, and then it is unable to take out the resistance where it had attempted to break out, but no, for now it's it. So US markets are having trouble. There is layoffs that's happening, so that news is impacting. So Nasdaq stocks are struggling. So obviously, the stocks in our place cannot do the opposite of that. Right? ICICI Bank has been breaking out and then it has been retracing after hitting the top of that wedge and trying to break out. That didn't happen, and it's cup and handle. It's right now at a very crucial support zone because it's a cup and a cup pattern or a rounding pattern. It is broken out of that, taken a support back. Now, any weekly candle that comes below this with a red close, which means that it negates that pattern and then it may end up to correct more towards the 750, 777 kind of. There is a possibility. But if this consolidation is happening at this point, then it will be good. It will mean that it will try to take out that all-time high once again upside. But as of now, momentum is in sideways, slipping. Kodak Bank has been zigzagging, doing nothing sideways, then upside, downgrade. So that has been going on for the last 2 years. So that's what is happening. Right now, it's in the journey towards the downside with the momentum sideways. That's about heavyweights and heavyweights. In a nutshell, you can say it's HDFC Bank that alone shows some strength. Others are all sideways and weaknesses in the IT2 stocks. Going ahead, how did the Fyers participate last week? So there is a concern here. The Fyers has been selling since last 11 days consecutively. The entire 2021 they were selling. That's another factor. But in last 11 days, continuous selling is what I have seen. 7,800 crores. and they have increased the selling to about 2000 or above 1000 kind of thing after small selling that is visible in the initial days. Look at this. If you see the charts here, you can see how this is selling 200, 600. Now gradually it is increased 1000, 2000, 2000, 3000 like that. It's fine. So this is the concern. FIs are buying and domestic institutions, DIs are buying, but not big enough to balance it. But that's what is holding the market as of now. So this is a concern. So when is the FIs coming back to this buying mode? How far is it? Then so let's analyze the global markets and the global commodities. Right. So global markets, if you see, let's get into the US markets. Right. This is what it shows. So the Dow Jones, this is the Nasdaq, and this is the S&P 500. You can see that's in a descending wedge on all of this, right? But Nasdaq is at support. This is also closing a support zone. Is there support zone? There. But basically, it's reversing at the top. And look at this. That's a Friday move. That is 700 is a weekly chart, but one day 700-point gain is what happened after the jobs data has come in. So that's very good reversal attempt to get back to the zone from where it had reversed. But that's not reflecting too much on the other indices, S&P and the broader index, S&P 500 and Nasdaq and all that, right? So Dow Jones has shown a big recovery attempt, but otherwise sideways moment is what it is, and we keep a close watch of that, because any attempt to move big like the way it has moved up, any fall to move down big would definitely impact us. If it is slow, we may look at global cues, but if it is big, definitely we look at the global cues and then react accordingly. So this is what we are, exactly what we are. So coming weeks, we never know what happens, because other indices are still in this even small bodies and very close support zones. Now big moves happen only in Dow Jones, and we'll have to keep a close watch. That's all I can say. But we should understand where the market is falling. Otherwise, that's global markets and currency. Let's look at this. Currency's dollar index is actually in a falling, descending. 10% of down has happened, and it's consolidating at this neckline of that breakout. It is not. It is cooled up a little bit. 0.4% is moved up previous week after a pullback, but otherwise it's very close to the 104, but not too far away. It is still not gone to the bearish zones. It is not still not cooled off too much, but a good retracement from the top of all-time multi-decade high levels. Right. But that is not reflecting. That reverse is not reflecting on the dollar index. Actually, this chart is wrong. It should not be the crude. It should be the USD INR currency pair that you should be looking at. So let's directly get in and have a look at those. Basically, I would just I'll just put that on here, and then we'll analyze that. Right? So sorry about that. So yeah, so the currency pair is not reflecting that. It just pulled back. So last week, 0.5% of down moves happened, and this is after an up move of 3.5% swing from the previous low. But that's not good enough. Rupee still at the weakest levels. That's about the currency. The currency is pull back a little bit, but no, rupee is not appreciated. The currency pair has not appreciated, has not moved down. Basically, rupee has not appreciated. Basically, this market we have seen it's flattish close, but otherwise it's an attempt to come back after a reversal attempt from the top of the descending wedge. Gold is that's another interesting. So crude oil has fallen down substantially. Last week it was very good downfall. That has happened. 74 level is what we are. That's 8% down. That's very good. So crude going down is good for a crude importer country like ours. But remember, there is a divergence here. There is a chance that it can climb back and then move upside because it is a parallel channel. But it has breached that major support zone also. It's good that as long as it is remaining at this level. So we are back to the 75 crude levels after a long time. Where it is expected to 13-year high of 120. 1 year back. So that's a good thing. But look at what is happening. The gold is spiking up. It is a gap up, and momentum is in the bullish zones on the weak, medium term as well as bullish zones, as well as the short term. So that's momentum bullish, and so gold suddenly spike keeps us to think that is the market falling down or not. But there is resistance right here. It has to surpass that, and then much more to go before it climbs to all-time high. So it's in a cup and handle medium term, but suddenly it has gained a lot of pace. It is a very good move from the downfall has happened. And it's a gap up of 2% up has happened, and it's in the bullish momentum. So to keep a close watch, as a hedging instrument, it's going to be good. The market is down, gold is spiking up. It's good hedging strategy, but to keep a close watch. So commodities are kind of very interesting sounds. For the crude oil is cooling off, and the hedging instrument is spiking up. Using indices are in reversal mode, but suddenly spiking up back. And currency is also having some pullback, but not yet enough. That's where we are, right? So keep a lot of these levels and these parameters that we analyzed, right? Now, stock picks for the next week too, both on the short side. Unfortunately, that's how the charts are showing as of now. Probably it may be at a support, and then it has reached the bottom, and it may be bouncing up from here. But I'm unable to find such. My scanner is unable to find such stocks, but even look at this, the anti-mine tree, newly formed merge company is also at a support zone, basically almost about to breach. It actually breached, but very very close. We don't have to be pinpoint at that particular RSI level itself, but it may be a downfall. But it could also be that it's a price pattern head and shoulder that may be breaching, and then in a neckline breach could give a very good risk reward to the next support zone at 35,000. Yeah, by the way, right. But keep tight stop loss about the entry candle high. So the average not harmful in the mine tree IT stock, which could give short side opportunities, short swing trade with tight stop loss. Bajaj Finance is another one. It's broken down the parallel channel that is coming from the COVID times on the weekly charts, right? And momentum has breached the bear zones, and trend is also rising up with bearishness, right? So it could be very very rewarding if you're able to trail and bring the profits as we go down. Right? If it happens, and tight stop loss definitely above this week's candle high. Short opportunities in the swing trade on Bajaj Finance as well as L&T Mindtree. So IT sector anyway is down. Bank index is also finance sector it's seen good downfall last May. So basically this trend line is long respected, and breach of that could give some more downfall for sure at least. But otherwise Bajaj Finance is a good stock. But yeah, you have to follow what the charts are saying. So two stock picks, short side, swing trades next week. Another one is a payoff. It's a non-directional strategy. It's a double diagonal calendar spread that we always rely on to get a wide range and a consistent but small profits. Right. So max profit is not too much for one lot. Increase your capital size as per your capacity. But look at this range, 17,500 and 18,200 is a very good range that market may respect. If it is not respecting, you'll have to roll up or roll down either sides, right? Profit is also decent. Range is good enough. And max loss is also not that much. The profit, targeted profit risk reward depends on, you'll have to target only 1 or 2%, but you're likely to get this every other week. Sometimes it may break the break even, but you still have the option to roll down or roll up, or even cut the loss at one side and then move it further up. So you always can play the game. And you also have the big spike advantage also on this strategy. This double diagonal current spread. Basically, you're selling the near month put and call options at the range that you require, and then buying the next month's put and call options for a hedge. That's what the strategy is all about. Very consistently profit making strategy that we can use. But the risk is completely defined. You know what exactly you will lose max. Right? You don't lose more than that. Your capital will still be intact. That's the beauty of that. Others could wipe out. If you're not having these hedge positions, you could wipe out the capital because some surgical strike or some Russian and Ukraine war or some news that may trigger overnight could wipe out the capital, and you could no longer be able to play in this market at all. So stay invested and stay with the capital intact with tight stop loss is what we can do. So I've looked at all those parameters for the weekly basis so far. Let's just wrap up and summarize what happened last week. Was basically giving up all the gains that we already the bulls hoping that the bounce would happen. CAP bounce could further proceed, but it didn't happen. It could negate it, and then we're back to square one where we are, and then but still it is support. It's a positive part of it, right? So the trend momentum is in the sideways, not bearish at on medium term. We're talking medium term, weekly basis on. Bollinger Bands in this expansion mode on the daily, but Bollinger Bands is normally looked at daily charts, but weekly if you see it's still in the sideways. So sideways there, trend was sideways, momentum sideways, everything sideways. And VIX is just trying to get out of that low regime of 14-15. So it's above 15, close to below that. So that means there is some uncertainty there. Operators put call ratio is not that great. It's towards bearishness, more towards bearishness. US indices have given a good spike on the Friday. We don't know whether it's sustained or not because S&P 500 and Nasdaq is not reflecting that spike up yet. So FIs are continuously selling. That's another concern. I think we missed that slide particular FI selling. So FIs has been selling 7,800. Yeah, we did cover up that, right? So FIs are selling. VIX is trying to get out of that low VIX regime and using that as reverse mode, but attempting to climb back. Operators, Bollinger Bands, trend momentum outside this kind. So all this gives me a mild bearish view still, because that's what charts are saying. Maybe it's a bottom and it's a support and a spike up, but yeah, mild bearish and mild neutral sideways view is what I have for the next week. Right? So changing for bounce still is possible because we are back to square one. We could bounce it from the previous support zone. That's a possibility. US market is trying to come up with good. Crude is falling. Rupees, some pullback, some gains is happening. US market is also attempting to come back. So that's all positive on the bull sides. So it may not be a big crash that may happen, but maybe the sideways momentum. Some consolidation may come in. That's not what Bollinger Bands is saying in the short term, but yeah, medium term, that's what it says. So some consolidation can be expected. So that's why I have the neutral plus bearish. I'm not sure whether it's going to be bearish or neutral, but definitely it may not be. I don't say it's bullish as of now. Look at the charts. No, I can predict with many other things, but with the charts, I can say it's only bearishness that is there overall the picture. Right? It's at a support zone, so I don't rule out the chance of a sideways come back to a sideways zone as well. So use market, you have to always keep a close watch of big moves. Small moves, it should be okay. As long as it's consolidating, it should be fine. Big moves, big crashes, big trend towards and all that happens in US market means we have no options but to follow that. So uncertainty is still the global cues are not that great. Other job status and inflation is coming down. So, measures are taking bearing fruits and all that is there, but that's possible. But uncertainty is still there on many aspects. On the recession fear is there. Crude is going up is a good thing, but the rupee is not appreciating it. Look at this, 82. It does not come down below that since long. VIX is not ready to go below 30. Just come there and then spiking up continuously. 15% happened in the previous week of spike up, right? So that's not that great too. All we can do is look at the probability zones where it can get resistance and get support. 70,500, 40,500 could be looked at on the Nifty. 80,500 and 40,500 could be looked at in the Nifty and the Bank in the higher side. 70,500, 40,500 is Nifty in the Bank only, but on the lower side. Right? So that's all you can do. So as I say, protect your capital, play safe. If the VIX is further spiking above 20, stay out of the game or cut short your position size. Always use hedge strategies and protect your investments with hedging instruments like gold, or you can even use options and different strategies like about gold and cash market puts and all that. You can have rental incomes. Videos are there in the playlist for you for that. Check out that as well. So that my view, mild bearish to neutral view is what I have for the next week. So hope this helps you in some way to have a clarity on what exactly the market is heading towards and where we are, what are the likely zones we may end up and all that. Right? So if this helped you in some way, consider hitting the like button, share it to my friends, colleagues, and everyone, and please subscribe if you're not, and put in your feedbacks and comments so that I can improve that better. Right? Thanks for watching. Happy trading. Happy learning. Bye bye.